morning from Sugar City Studios in beautiful historic Savannah, Georgia on Johnson Square. North Point of View podcast with Dr. Walter Kempsey. Good morning, Walter.
Morning, Mark. How are you?
I'm good, man. How about you?
Great.
Good. Hey, we wrapped up the last podcast. We touched on inflation. We've got sort of the perfect storm right now in terms of construction material, commodity prices, et cetera. So sort of connected tangentially to that, I read an article in the Wall Street Journal this week about 4% inflation, which I'll ask you that question, is that sort of what you see, the forecast? But the real question for this podcast is that a tipping point for the stock market? I know you and I talked about that article in the journal. Basically two questions there. Number one, is that 4% number about what you're seeing? And then really, is that a tipping point in your mind for the stock market?
Yeah, let's think about it for a second in a slightly different way. If inflation is
as usual, I ask a simple question and you make it complicated.
Well, no, I think
different perspective.
Yeah, you have to
point of view.
Yeah, you have to have the right point of view to get your head around it.
Here you go.
Suppose inflation drops to 0%.
Okay.
That's scary because if you're, not all industries, all segments of the economy experience the same inflation rate, right? Old industries where all of the small guys got wiped out and you have 3 or 4 companies that basically supply 80-90% of the goods in the supermarket, like cereal companies, or like in the airline industry where you have 3 that really 90% of the passenger revenue miles are those 3.
Communication.
Yeah. So if you're at 0 and they're okay because there's little competition. If their costs go up a bit, they can pass the cost on. But if you're in a new industry, like a cell phone manufacturer or whatever the new technology device is, you invented, you have to charge a high price for it because you don't have scale economies yet. You still have to recover your R&D. But others see your product, they start imitating it, and then the price competition kicks in and prices drop.
Right.
Laptop computer in 1990 was about $5,000.
Right.
And today, I can buy a far more powerful computer for $500.
Sure.
So there's a range of inflation rates for different industries. You get to 0, and a big chunk of industries that have a lot of competition could experience deflation. That means profits go down. That means you have to lower your costs, and that means probably dismissing people.
That's a down cycle.
That is a down cycle.
Yeah.
The problem is if this happens enough and enough people lose their jobs, you go into I would call it a vicious cycle.
Yes.
Right? People can't pay their debts, then therefore they're taking their stuff and throwing it in the market, the house, the car, whatever, pushing prices down, which makes it more difficult for companies who then have to go through another round of firing. Things like that is what happened during the Great Depression.
Right.
So 0% is a very scary number, and the Fed has been fighting really hard to get inflation to stay closer to 2%.
Right.
And we hardly ever have a 2% inflation rate. At least we haven't much in the last 20 years. So that's not good. Now, with inflation going up, the stock market likes that. But at some point, an inflation rate goes up too high, and you start worrying about the Fed having to get aggressive. In 1980, 81, the Federal Reserve raised the discount rate to 21%. To kill all of that inflation momentum in the 1970s.
Right.
And it was very bad. And a lot of people went broke over that. Farm prices, the farming land dropped a lot in value. Farmers were writing threatening letters to the Federal Reserve Chairman. It was that
was back in the day. Willie Nelson and Farm Aid concerts and all that kind of stuff, right? Yeah. Remember that?
Yeah, it was pretty tough. So you don't want inflation rates to go too high. You want them somewhere between 2 and 4%, and that's what the Fed is saying these days.
Right.
Now, we just had a headline number come in above 4%, but let's remember that the Fed doesn't target the CPI with food and gasoline included. It targets something called the Personal Consumption Expenditure Deflator, the PCE deflator. And right now, the PCE deflator, I didn't look at the last number, but it is not way up there. It's still pretty low, like around 2%. And I'm concerned that that measure is probably not correctly capturing the true inflation.
Okay.
Right?
Why is that?
Because I think it's weighted too much into real estate, into the cost of of renting or owning a home, and I think that's overweighted. I think the other things like gasoline, food, and other items, and that you'd find in the mall, they've gone up a lot in price, but it's not being captured properly in the data.
Got
I
it.
don't know about you, but I'm spending a hell of a lot more at the grocery store these days.
Feel like it, yeah.
Yeah, I mean, I used to get like 4 or 5 bags of groceries for $100. Now it's almost $200.
Yeah, and depending on if you go to that little boutique, shop around the corner, it's like half a bag.
Yeah, exactly.
Yeah.
Well put. So, but anyway, so that's
4% though is sort of a
Yeah.
significant number.
Yeah, and I saw an interesting Wall Street Journal article, and the guy wrote a very nice analysis, but I don't remember the exact facts because this goes back a lot of years. But in the 70s and 80s, we started with the cost of living adjustments to Social Security, and a lot of union contracts with labor. They had a COLA agreement in there, and I think
Cost of living adjustment.
exactly
Okay.
Cost of living adjustment. And once you hit 4% and inflation stayed there or above there, then they started doing some, I believe it was quarterly adjustments to wages. And what happens is, as the wages go up, the companies would raise their prices. As they raised their prices, inflation went up. As inflation went up, wages went up, which made prices go up. And we got what's called a price-wage spiral, upward spiral.
Right.
And it was very hard to kill that. That was why the Fed, raised the discount rate to 21%. Just hammered it.
So is that why? So would you agree with that assessment that 4%, anything above 4% inflation is a tipping point for the stock market at this point?
Yeah, I think 4% or above, and you are kicking off, moving perilously close to a wage price spiral.
Gotcha. And so something really to sort of pay close attention to right now.
Mhm.
Obviously, stock market's still pretty heady, and seems to be a lot of steam, a lot of support. Been huge growth in the last couple of years.
But if you look at the last 4 to 5 months, what's really gone up are the value stocks, not the growth stocks.
Right.
It's the tech guys, they've kind of hit a ceiling,
Yep.
and it's the Procter & Gamble kind of guys. Big producer, big market share in the products they produce.
Boring is good.
Yes.
Sort of like us.
Yeah, exactly.
Okay.
It's all a cycle, right? Everybody gets 5 minutes of fame or 10 minutes, whatever it was.
Yeah, we're probably not going to get that much.
Yeah.
Hey, everybody, Walter, thanks.
For sure.
Appreciate your time today. Good being with you as always.
Good talking to you.
Yeah, and for listeners, thanks for tuning in to the North Point of View podcast. We'll see you soon. Thanks.
Take care.